Welcome to this weekly update. I'm Julia Lee, an equities strategist with Bell Direct. And this week has been big because of annual general meetings. It's AGM season and there can be a large impact in terms of share prices. We certainly have seen that with Nearmaps, which after its Tuesday AGM saw an increase of 29% in its share price. ServiceStream was up 7% after its Wednesday AGM, and on the flip side, the Reject Shop dropped 7% on Wednesday after its AGM, followed by another 13% drop on Thursday as brokers downgraded the stocks on some of the commentary at the AGM, and HealthScope down by a massive 17% on Friday at its AGM. Now, given the impact of AGM, some of the brokers have been crunching numbers on the impact of AGM season. Macquarie looking at positive and negative surprises that stem from the commentary from AGMs. Looking at negative surprises, and if it's a mild negative surprise, generally you see a down drift in prices for a 6-week period. If it's a large negative surprise, you usually see underperformance for 1 to 2 weeks. For positive surprises, though, you usually see a mild positive surprise, seeing a down drift in prices for 2 weeks, which is quite surprising. But after that 2-week period, you do see outperformance for the company. And for a large positive surprise, Macquarie is saying that the market's largely efficient, pricing it in at the event. Looking and moving on from Macquarie to Deutsche Bank, and Deutsche Bank looking back to Brexit stocks, saying beware of Brexit stocks. What we have seen in the past month is the pound depreciating another 10%. Also, if we have a look at some of the UK data surprises, they're now at a 3-year high, and some of the PMI as well as Bank of England surveys pointing to a downward growth expectation. Also, an increase in political risk certainly not helping as well. So a huge list of stocks to be aware of that do have exposure to that UK region. Staying with Deutsche Bank, and Deutsche Bank looking at whether resources and banks can move together. It's overweight resources but neutral banks. It's saying around the banks, so it is alert to the value that it does see in banks, and it's open to being overweight both sectors in the future. Some of its key calls are overweight Rio Tinto as well as South 32 in the resource space. Just concentrating on the banks now from Deutsche Bank, and look, they remain on the sidelines with the banks, and the reason are these two charts here. They're seeing a softening credit growth environment, and also the 3-month growth rate is at a 3-year low. Also, if we have a look at recent loan approvals, that's also pointing to a slowing down in terms of the market. But why is Deutsche Bank so positive on resources? It's overweight on resources, and that's because if you consider some of these resource companies at spot prices, there's a large gap between spot prices and what's forecast by brokers at the moment. In fact, looking at PE ratios on a spot basis, well, Whitehaven Coal would have a PE ratio of 4 instead of a PE ratio of 8. Fortescue, a PE ratio of just 6 instead of 8. And South 32, a PE ratio of 8 instead of 14. And even the big one, BHP Billiton, its PE ratio based on spot prices is just 15 compared to on forecast prices, which is at 25. Deutsche Bank isn't the only one focusing in on resources this week. If we look at Morgan Stanley also focusing in on resources, and this is a chart of PE ratios at spot prices. You can see some of the cheapest resource companies at spot prices include Whitehaven Coal at 4, Fortescue at 6, and South 32 at 8. It sees the most upside in stocks like Whitehaven Coal, where it sees 67% upside if spot prices continue. And if stock valuations are at spot prices, BHP Billiton upside of 27%, Resolute upside of 25%, South 32 upside of 23%, Iluka upside of 19%, and Rio Tinto an upside of 16%. On the flip side though, be wary because there is some downward negative skews as well, especially with some of the gold stocks which have run ahead of spot prices and are trading at a premium. So some of the negative implications would be for stocks like Regis Resources, Newcrest Mining, Independence Group, Evolution, as well as Northern Star if we don't see a continuation of the rise in gold prices. And some of the other stocks outside of gold stocks which have run ahead as well of spot prices include Western Areas, Sandfire, Oz Minerals, Alumina, as well as Fortescue Metals. Moving on from Morgan Stanley and looking to Morgans. And Morgans had a 2-day conference in Queensland this week with a number of different companies reporting and presenting. If we have a look at some of the companies that Morgans likes out of this conference, some of its key calls include Motorcycle Group, MTO is the stock code, Corporate Travel, CTD, ALS, the stock code ALQ, Mantra, MTR, as well as Catapult, CAT. So if you're looking for stock ideas, plenty there from Morgan's 2-day conference. And finally, just ending with the best and the worst performers for the ASX 200 this week. Topping the list of best performers is Infigen Energy, the renewable resource company, up 22% for the week. Tattersalls also doing well, up by 14% after the announcement of that merger with Tabcorp, and Tabcorp paying a premium for Tattersalls. And Whitehaven Coal up 10% as thermal coal prices continue to climb this week. On the flip side, we have Healthscope down by 19% after some disappointing commentary from its AGM on Friday. And of course, the casinos under pressure after news that Crown Casino employees had been arrested in China. Sky City, which is based in New Zealand, down by 18% because a large portion of its business does depend on VIPs from China. And of course, Crown down by 15% for the week. That's it from me. Thank you so much for joining us for this weekly update. I'm Julia Lee from Bell Direct. Hope to see you next week.